So when we talk about creating wealth, not income, what are we talking about? We're talking about buying or investing in real estate, private businesses, private credit, other equity investments. One of my favorites, cash value life insurance. Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. All right, on today's podcast, I'm going to talk about one of the strategies that the wealthiest use to help optimize their taxes, and talking about how you can turn income into debt. Now, that might sound like a weird thing, but really how to turn debt into income and use this strategy that is used by some of the wealthiest in this country. Before we get started today, make sure if you're not getting our weekly newsletter, you go to nextlevelincome.com, subscribe to this podcast, and you'll get our weekly newsletter as well. I shared this same strategy with our newsletter subscribers last week, as well as an infographic that I'll be sharing with our YouTube subscribers and those that are watching on YouTube here today. If you're interested in learning more about our investment options that we have both of our funds open currently, as well as our current acquisition in Houston, 376 units in the Houston market. Go to nextlevelincome.com and click on the invest link. And if you're getting started or you're anywhere on your investment journey, check out our free financial coach at chrislarson.ai, chrislarson.ai. And that's your 24/7, round the clock financial coach. You can have a text conversation. You can even have a virtual phone call with me at your leisure, at your convenience. So the podcast today was inspired by my 14-year-old son. He's in his math class and they're talking about personal finance. It's been fun because he's learned how to trade stocks and he's learned about savings, and it's inspired a lot of great conversations. And last week he asked me what a line of credit was. And as I explained it to him, I realized that a lot of people don't understand how to properly use lines of credit. And I wanted to talk about how you can use this strategy as part of your financial picture, part of your financial strategy to really help grow your wealth. And I'm going to give you a few examples today as well. My son and his math class are really learning more about like a Dave Ramsey style of personal finance. Get a good job, pay off all your debt, put money in your qualified retirement plans and low-cost IRAs and those sorts of things. And that's great. But that's not what we teach here at Next Level Income, because we want you to be ultra wealthy. We want you to rise through the ranks and really have true financial abundance, which is why we teach the strategies of the ultra wealthy here. Chances are, if you're listening, you probably have a high income career or business, and your number one biggest expense is probably taxes. So how can you use a strategy like we're going to talk about today to decrease the taxes that you're paying? If you want to learn other ways that you can decrease taxes, send us an email at info@nextlevelincome.com and just say, I'd like to save money on my taxes, or lower my taxes in the subject line at info, and send that to info@nextlevelincome.com. And we'll give you a free strategy session to see if you can use the same strategies that I use to lower my income tax rate from 30% to only 17%. And that's available to you even if you're a W-2 income earner. So email info@nextlevelincome.com and say, I want to lower my tax bill. Also, we'll be sending out a webinar for how to lower your taxes here to all our newsletter subscribers too. So don't forget to subscribe. Okay, so what is the number one strategy that the wealthy use? They focus on creating wealth, not income. And this is something that I started doing when I was young. I bought my first property at 21, and my goal was to align my expenses with my passive income. Now, it's not going to start off super exciting. If you make, $100,000 investment, you've got $500 or $1,000 a month coming in passive income. That might not seem like much, but if you're working towards a 5 or 10-year goal of increasing your passive income above your regular monthly expenses, then it doesn't take as long as you might think to get there. A lot of people start off on this, and if you're in your 20s and you're listening, congratulations to you. You can do this by your mid 30s like we did, and certainly by the time you're 40. If you're in your prime earning years, chances are you have more disposable income that you can invest. So when we talk about creating wealth, not income, what are we talking about? We're talking about buying or investing in real estate, private businesses, private credit, other equity investments. One of my favorites, cash value life insurance. And the great thing is the growth in these investments is not taxed as regular income. It's not taxed until you sell typically these investments. And the great thing is you don't actually have to sell them to be able to get money out of these investments, to get equity out of these investments. And that's what we're going to talk about. We're going to talk about how to borrow against these assets tax free. So, what I described to my son as a line of credit was what we first used, which was a home equity line of credit. So, I'm going to talk about three examples. So, I'm going to talk about a home equity line of credit. I'm going to talk about a line of credit on your investments. I'm also going to talk about a line of credit on your life insurance, specifically the cash value of your life insurance. So, a lot of you are probably familiar with a home equity line of credit. So, let's say you buy a property or home for $500,000, you put 20% down, and that property over the last several years has grown from a $500,000 in value to $1 million in value. Well, congratulations. You probably have the same mortgage and you have an asset that has doubled in value. But how do you actually access that? You can go to the bank or a bank and you can request a line of credit, and banks will loan typically up to about 90% of the value of your home in the form of a line of credit. So if you bought that home in this example for a $500,000 with $100,000 down, you started with $100,000 in equity. If it's now grown to $1 million in value, you now have $600,000 in equity. You probably have more than that because you've probably paid down the mortgage as well. So let's say you've paid down that mortgage and now you have $700,000 in equity in a home you purchased for $500,000 and is now worth $1 million. The bank may give you a line of credit up to 90% or $900,000 for that $1 million property. So if you owe $300,000 now on that property and you have a line of credit up to $900,000, that's $600,000 that can be borrowed. Now, I'm not encouraging you to go out and take on debt to make investments, but this is something where you may be able to generate a pool of capital at a relatively low interest rate. Typically lines of credit today on HELOCs, home equity lines of credit, are below 10%. So typically between 6 to 10%, depending on what your credit score is and the percentage of the equity that you tap in. That can be really positive if you need capital for something like paying for college expenses, making improvements on your home, or maybe you want to make an investment. And again, I want to caution you, if you're going to borrow to make an investment, you want to make sure that you have enough cash flow to cover the debt service. Or maybe you say, hey, I'm going to use this as my opportunity fund. So in chapter 3 of my book, I talk about an opportunity fund. Where are you keeping your cash before you make an investment? I don't like to have it sitting in a checking account earning 1% when it can be somewhere else earning a higher rate of return. And I'll talk about what we do for our opportunity fund here in a moment. So that's the first example, is a home equity line of credit. Second example, and I've heard some of our investors have used this, is they have a portfolio of investments. These may be stocks, bonds, cryptocurrency. And if you've been investing over a long period of time, you may have saved a lot of money, 7 figures or more, in your investment accounts. And you can actually get a line of credit. Let's say you have really high quality dividend paying stocks like ones that Warren Buffett is buying and investing in, those sorts of businesses. You can go and you can actually get a line of credit. And I think this is important. We mentioned a home equity line of credit. You may get up to 90% of the value. If you're borrowing against a portfolio of investments that are volatile, like stocks, you're not going to get as high of an amount of in terms of a line of credit on that. Same thing with cryptocurrencies like Bitcoin, that's going to be highly volatile. But maybe you're like me, and when you buy Bitcoin, you don't want to ever sell it, but you may want to have access to the gains that you've had in that. So let's say you bought $100,000 of Bitcoin at $20,000 a coin. And now, it's gone down here recently, but let's say it's worth $70,000. So if you had five Bitcoin, that's a $250,000 gain that you've had in those Bitcoins. You may be able to borrow against that and have a line of credit on the Bitcoin or on your investment portfolio. If you're a business owner, this is something else you may be able to borrow against in your business as well. And these can be pools of capital where you can set up lines of credit. You may not access them, but these are important to have, in my opinion, when you have a short-term urgent need for money, or let's say a really great investment opportunity comes up and you need, say, $100,000 within 30 days, and you're going to get a $100,000 bonus from your job. Maybe like me, you're a sales executive and you've got a big bonus coming up at the end of the quarter, but you want to make the investment today. Line of credit can be a great way to go out and access that cash, knowing that you can pay that money back over a short period of time. So you can kind of anticipate the arbitrage that you have in those two things. And then my favorite is using cash value in your life insurance policy to access as a line of credit. And our bank will actually lend us up to 100% of the cash value in our life insurance in the form of a line of credit. And right now we're getting very favorable rates in that, much less than we have on our home equity line of credit, for instance. And the reason banks love to lend on life insurance is because you are the collateral, more specifically, your life insurance policy. So if you have a $2 million life insurance policy and you have $200,000 of cash value in that life insurance policy, you may be able to borrow against that cash value, and the bank will lend you up to 100%, very favorable rate. And the great thing is you're not actually touching the cash in your life insurance policy, so it can continue to grow in your policy. And typically it's growing at 3, 4, 5, 6% a year, and it's tax free. And that's what the wealthy do. Some of you may have heard of Elon Musk borrowing against the value of his companies. He did that to buy Twitter, for instance. And this is a way when you can use the value of a company, you can access cash, but you don't have to pay tax on that. We did the same thing with one of our properties that we bought in downtown Asheville. I bought it from the bank in foreclosure for $525,000. As the value went up on that property, I was able to refinance that property. I was able to take the cash that I put down on the property out, and I was able to take an additional amount of cash, and I was able to cover the debt service with the rents that were coming in, the net rents, and I was still cash flowing about a 30% positive cash flow in terms of gross rents versus net rents. So for instance, if you had $10,000 coming in a month, that would be $3,000. So there was still a really nice buffer to cover that debt, that long-term debt, but also get that cash right back out so I could reinvest the money that I put in that policy. So all these are some of the same different flavors of the same strategy. If you want to learn specifically more about the life insurance portion of this, go to nextlevelincome.com, click on the banking link, and you can schedule a call with our team and learn more about how we specifically set those policies up to maximize the cash value so you can align those with your investment opportunities that are out there. And for those of you that are watching on YouTube, I'm going to go ahead and share the infographic that we shared with our subscriber list. And this is how the wealthiest of us out there, how the rich avoid taxes, specifically turning income into debt. So step one is how wealth is created through stocks, real estate, businesses, and other investments, and taking that appreciation and income growth, as we outlined in some of our examples. You can borrow against these assets, using those assets as collateral, but getting the loans tax-free. Once you have grown your assets to a large enough amount, you can actually live on these loans. Now, why would you want to do that? Why would you say, well, Chris, why would you want to borrow money to live on? Now, ideally, you're using the passive income from these investments to cover your expenses. But if you need a larger amount of capital, as I mentioned with our office, you could refinance or restructure that debt, pull a large amount out tax-free, and you could pay those loans back with the cash flow. So it can be a really powerful addition to a strategy where you're investing in cash flow assets. And that's part 4 of this strategy that you see in the infographic, which is, using new loans or restructuring those loans to pay off the old loans. And you're using the cash flow, which is also probably tax advantage, specifically if you're invested in real estate, to cover the debt service on these. And then you can start to roll some of these investments over. So if you have an investment, you could even do a 1031 exchange and move that into a new investment. You could refinance that and pull some capital out, and you can start to stack these strategies on top of each other. And this is the final piece. And this might be the most important for some of you that are listening, that are looking to structure your portfolios, looking to structure your assets for generational wealth. If you have real estate, there's a strategy called a 1031 exchange, which we've talked about in prior episodes, most recently with Dasha Beardsley, who wrote a book on the 1031. So you can access that. Just go into nextlevelincome.com and search 1031, and you can listen to that episode with Dasha and I. But the great thing is when you pass on an asset to your heirs, they get it at a stepped up basis. So let's go back to our first example. So that home that went from from $500,000 to $1 million, if that was passed on to your heirs, they would inherit that at the new stepped up basis at $1 million. They could turn around the next day and sell it. And that is a very important strategy, very powerful strategy that can be used to not only prolong the tax bill, but essentially wipe out the tax bill entirely. And then when you stack this with life insurance, you can actually have a multiplier effect for generational wealth. And that's important because now your heirs, they can use the cash value of your life insurance to either live off of as dividends or borrow against to help them create a larger portfolio of assets and start the whole cycle all over again. So hopefully this has been educational. We've talked a little bit about how you can use some of the strategies that the wealthiest individuals use to create true wealth and not be penalized by creating income. Click on the links below if you'd like to schedule a call with our team and learn how you can use these strategies for you specifically. Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.